Fantom is killing Ethereum, and it's killing it by taking away market share from Ethereum. So does Avalanche, so does the Binance Smart Chain, but Fantom is in a unique position. And in this video, we're not just going to hype up Fantom, right? We're going to look at data. We're going to look at total value locked developments. We're going to look at relative price performances. We're also going to look at the ecosystem of Fantom, how that's developing. And in the end, the problem is always we are currently pretty much in a bear market, right? So when we have an altcoin that we want to invest in, that might go down more than, say, Ethereum or Bitcoin, because there's some kind of inherent leverage in those smaller altcoins. But there's a strategy that we can deploy that we're going to describe here at the end of this video. There's a strategy where it can be somewhat neutral to the general market, to the general crypto market, but still benefit from Fantom taking away market share from Ethereum. So with that strategy, you can gain money when all of crypto is going down, but Fantom still takes away the capital from the Ethereum blockchain. But first things first, let's look at the basis of this investment thesis. So the idea is that Ethereum will become less relevant over time. And here on DeFi Llama, we can see it already has exactly that momentum in the past. This chart over here, it starts in August of 2020 all the way to today. And in purple, we see the market dominance in terms of total value locked of Ethereum. And it was really, really high, say in January of 2021, right? Like more than 95% of the smart contract platforms total value locked was in Ethereum. But nowadays, this is very different. Nowadays, only 60% of their total value locked is in Ethereum. And the reason behind this is relatively obvious if you've ever used the Ethereum blockchain. The gas fees, they are very, very high. So unless you don't deploy several thousands of US dollars with every single bet, these gas fees are going to take away a lot from your performance. Doing DeFi, where you maybe just get, say, 10% per annum on your stablecoins, doing that with $100 US is impossible on Ethereum. And so the money simply flows to cheaper blockchains. Why are those other blockchains cheaper? It's because their bandwidth is higher. They can process more transactions per minute, meaning there's less competition for each single transaction to go through. In Ethereum, the competition is really, really high. There's very little space. And so just a simple approval of token spent, for example, on a decentralized app, it can already cost multiple dollars, like $5 US or so. That's different to, for example, the Binance Smart Chain or Avalanche or Fantom. If you've ever used any of those competing layer ones, you will know that the gas fees are pretty much unimportant when considering the overall performance of the portfolio. And so why now Fantom, right? So first of all, we have to establish we think that Ethereum is going to continue to lose market share, or in other words, the competition is likely going to innovate quicker than Ethereum is, which I think is a relatively reasonable assumption, right? The development of ETH 2.0, I think it's not even branded like this anymore. It is very, very slow and the competition is catching up. But why now Fantom? That's because of the market cap to total value locked metric. So the market cap is simply the number of tokens of a certain blockchain times its price, right? And with all of those blockchains, you've got a token that you pay the gas in, right? For the Binance Smart Chain, it's the BNB coin. For Avalanche, it's AVAX. For Fantom, it's FTM, etc. And there's also total value locked, right? You might, for example, bridge over money from Ethereum to Fantom using a bridge such as AnySwap, or I think now it's called multi-swap. So you move your capital over and you can measure how much capital is active on that blockchain. And when you take a ratio, right, of how much capital is being processed on a blockchain versus how much is the base token worth, if you take that ratio, market cap to total value locked, you see that the Binance Smart Chain is, relatively speaking, the most expensive. The market cap is 5 times its total value locked. For Fantom, it's the lowest. It's only half of its total value locked. Fantom, just with this measure, is very, very cheap. Of course, this measure isn't perfect at all, right? We've got a lot of variety over here, but still, baseline, I think it does make sense to take this to a certain degree, to give this some kind of credit. And so the analysis we do over here, we can also do this with Avalanche. Another video for Avalanche will also come out on this channel, maybe in 2 or 3 days, something like this. But now we are simply looking at Fantom, and we're going to look at how to develop a strategy around this. But before we do this, let's first look at relative performance. Most people approach performance numbers the wrong way. At least that's what I think. Most people simply just look at the US dollar chart. So this is now Fantom in US dollars, and currently we're looking at $1.55. Okay, so this is where most people look at and they think, okay, I should have bought over here, I should have sold over here. But the problem is these charts, they are very, very highly correlated to other crypto charts. So this is the Fantom chart, right? Look at this bottom over here. It happened on the 20th of July last year. Let's also look at Bitcoin. We've got the same bottom also on the 20th of July, the exact same day. Let's look at Ethereum. Also the exact same bottom on the 20th, on the 19th of July, pretty much the same time. And the same goes for those tops, right? I'm not going to repeat this now. Just look at this, right? It's pretty much the same thing. Cryptocurrencies are highly correlated, and we can see this, right? When there's a bearish day, everything is going down. When there's a bullish day, everything is going up. Of course, not 100%, but it's a good rough approximation. And so what you actually want to look at is whether or not to buy Fantom. When you want to make this kind of decision, you want to look at relative performance. You don't want to look at the US dollar chart. You want to look at Fantom versus Ethereum, Fantom versus Bitcoin. How is it outperforming? How is it underperforming? What's the volatility relatively speaking? And so here we've got Fantom versus Ethereum. This is now a relative performance chart. And in the early days, they were pretty much moving in tandem, right? Sometimes Fantom was relatively cheap. Sometimes Ethereum was relatively cheap, or Fantom was expensive. And only recently, since beginning of the last year, so since the beginning of 2021, we had this massive outperformance, which does make sense because it coincides with this total value locked crash for Ethereum during that time. So there is some kind of connection between total value locked and the underlying price. It's not perfect, but it is existing. And so I think it makes more sense to do technical analysis on those relative valuation charts. And you can do those kind of relative valuation charts to any kind of coin. So this is now Fantom relative to Ethereum. So there is a bit of risk, obviously, but there is also unlimited upside potential whenever you think this might break. Then we've got here Fantom versus Avalanche. A few more lines from a prior video. Here, Fantom looks, comparatively speaking, to Avalanche relatively cheap right now. Then let's also look here at Fantom versus Polygon Matic. Now, Polygon Matic is not, in the strict case, a competing layer one. It's intended to be just a scaling solution to Ethereum, but in practice, when you use Polygon, it's pretty much the same thing. You have to bridge over your money, and you can only interact with decentralized applications that are actually Polygon compatible. So in the end, using a competing layer one or using Polygon as a scaling solution of Ethereum, it feels the same. It's the same thing. Let's look at Fantom versus Solana. So here Fantom isn't that cheap. So maybe Solana, relatively speaking, to Ethereum is cheap. You might want to look at Solana versus Ethereum, which is, by the way, bleeding for the recent past. Solana is relatively expensive. And then here we've got Fantom versus Algorand. So all kinds of relative charts. I think especially versus Ethereum, this looks like the most clear bet, right? If you want to bet on one of those relative charts, it's probably the best to be bearish on Ethereum and bullish on Fantom, relatively speaking. Now let's look back at the ecosystem. Why is Fantom so interesting besides just the market cap versus a total value locked? One more time, we're going to look at DeFi Llama. It's a really, really useful site. And here, this is the column we want to be looking at. Protocols, it's just a fancy name for decentralized applications. How many decentralized applications do we have on different smart contract platforms? And of course, Ethereum is leading the pack with 539. And Terra Luna is still a relatively tight ecosystem. It does have a lot of TVL though, due to its anchor protocol. It's 20% per annum return on stablecoins. But when we look here at Fantom and Avalanche, we are also at 170 decentralized applications. This is comparatively high, right? And note also how AVAX and FTM are head-to-head with each other. We can see this in a lot of ways. The total value locked is pretty similar. The number of applications is pretty similar. We can also see this in terms of the kind of applications that are running on both blockchains. When there was, for example, the Olympus DAO fork hype going on, we saw this both popping up in Fantom and Avalanche pretty much at the same time. It started off with Avalanche, but very quickly also moved to Fantom. So AVAX and Fantom are head-to-head competitors. The reason why we look at this relative to Ethereum and why we don't, for example, look at Luna versus Ethereum or Solana versus Ethereum is because of its EVM compatibility. So what does that mean? When you have an application on the Ethereum blockchain, you can directly port this over to AVAX or to Fantom, basically with a click of a button. So you can use the exact same code. You can use your Solidity smart contract that you already use on Ethereum and just deploy them on another blockchain. So it's very easy to copy things. That's different to Terra Luna. That's different to Solana. You need to rewrite the application. You need to write it in a new programming language. That's why we've got this direct competition between Ethereum. That's why the money is directly flowing from Ethereum to AVAX and to Fantom via those bridges. So what's most being used for Fantom? It's of course the bridge, right? Multi-chain, which as the name suggests is available on multiple chains. Then we've got SpookySwap, which is the largest of the decentralized applications on Fantom. Then we've got Scream, which is the largest of the borrowing and lending platforms. So that's a fork of the Aave protocol. That's something that will become more important for this video. And we've got Geist Finance, pretty much the same as Scream. And then we've got Yearn and Curve, very standard DeFi protocols. RenVM, a bridge from Bitcoin, for example, Beefy Finance, Beethoven. So I know all of those decentralized apps. I've used all of them. And this is pretty much the focus of the Fantom ecosystem. It's decentralized finance. It's getting yield on your cryptocurrencies. And it makes a lot of sense that Fantom gets all of this adoption for this use case because of the low gas fees. And so this is the total value locked development of Fantom, right? We get these spikes sometimes when there's a big initiative happening, and then the retracements when there's a crypto winter, for example. When we look at this denominated in Fantom, we will see that the retracement isn't that massive. The chart isn't loading yet, but just trust me on that. The Fantom token is currently going down. So money isn't actively flowing out of Fantom. It's simply the overall crypto winter that's triggering a lot of token prices declining. The point of all of this is the ecosystem around Fantom is large, and all of the major use cases that you can currently find on Ethereum are also present on Fantom. The main use case where Ethereum is still the strongest and where a change is unlikely to happen that quickly is the NFT space. So Ethereum is thriving on NFTs. That's probably why the price is still holding up somewhat okay, even though the technology is that inferior. But it's really hard to compete with the NFT market because single NFT items are simply that valuable. So who knows if this market can also move over at some point. There are obviously NFT offerings on all of those layer ones, but their trading volume isn't comparable at all to what we see on Ethereum. Now let's come to the juicy part of this video, setting up a nice trading strategy to profit from Fantom without being exposed to the overall crypto bear market. If you so far enjoyed this video and if you would like to watch more of this, feel free to subscribe. I publish videos regularly. So let's jump right in. Now here's the trading strategy around benefiting from Fantom outperforming Ethereum. In the end, essentially, we want to bet on falling prices of Ethereum and bet on rising prices of Fantom. And so the way to do this is we can borrow denominated in Ethereum. And we can then use these proceeds and swap that Ethereum into Fantom. So in other words, we've got, say, a loan of 10 ETH, and then we have that loan on, say, Geist Finance. So we will go through this in this video. And then we want to swap this after we get that loan to Fantom. Then we wait Fantom to appreciate versus Ethereum. And then at a later point in time, when we want to resolve this position, we will swap back those Fantom to Ethereum again and pay back that loan. And we will have hopefully more Ethereum left after the swap because Fantom appreciated versus Ethereum. But there are several caveats to this. The first caveat is the inherent leverage of Fantom. So let's look at this, for example. Here, during this rally from the 20th of July to the 25th of October last year, Fantom went up by almost 2,000%. And Ethereum also went up, right? It's the correlation. But let's look at how much Ethereum went up. Ethereum only went up by 150% or so, way less. So there's an inherent leverage, and that is true for both sides, when it goes up or when it goes down. So when we take all of that borrowed Ethereum and swap it against Fantom, when the overall crypto market is going down, then even though money might be flowing from Ethereum to Fantom over the long term, this inherent leverage of Fantom will in general be bad for us. So in the end, we need to have a smaller position of Fantom that we go long on versus the Ethereum position that we go short on, that we bet on falling prices. And so what's the ideal ratio over here? In order to determine this, we need to get the beta of Fantom. And this is the point where I plug now the premium membership over here. We've got tutorials on exactly that, on how to determine the inherent leverage of an altcoin to, for example, Ethereum or to Bitcoin. So there's one video especially around Fantom. That's over here, backtesting with Excel, risk-adjusted returns, calculating alpha and beta. So this is a video describing how to actually do this. You take the price data and plot different days on a scatter plot and then try to find out with a regression chart how much on average on a particular day is Fantom moving versus Ethereum. And in this video, when we go through this whole process, so this is done via Microsoft Excel, when we go through this entire process, we find out Fantom's inherent leverage versus Bitcoin is 3.0. So maybe versus Ethereum, it's a bit less, maybe it's 2.8 or so. Let's still work with 3, it's a round number. Now, if you want to know how to do such an analysis, right, how to get the beta for another asset, or if alternatively you want me to do such an analysis, you can check out the premium membership here at thebitcoinstrategy.com. Link is also in the video description. There's a private chat where you can ask me these things, where I make analyses for the members. We are currently 70 people. So if you want to dive in deeper, feel free to check this out. Now let's go with a beta of 3 and let's set up that trade. What you want to do is you want to borrow in Ethereum. So you go to a borrowing and lending platform. For example, let's take Scream. So Scream is simply an Aave fork, right? We've got Scream, we've got Geist. So you want to borrow, we want to connect our MetaMask with the Fantom blockchain. So that's what you need to do. There's probably ways to do this a bit simpler on centralized exchanges, but I'm a fan of using decentralized applications. And so this is how you do this. You go over here in the overview and you check the borrow APY. So for Ethereum, we currently pay 3.5% per annum to borrow Ethereum. You also get 2.4% in Scream tokens as a reward. So in the end, net, you only pay 1% per annum to borrow Ethereum. Now, in order to borrow something, you have to deposit something, right? You need to give collateral to the platform. And that collateral is higher in value than the amount you borrow. So you want to deposit something, ideally a stable coin. So you can go with Magic Internet Money, for example, or what's probably a bit safer, with USDC. So you deposit your USDC, say 1,000 USDC, click over here, you deposit, and you will get 2.7% per annum for depositing. Not very much, but in the end, we just want to make this more or less neutral in terms of financing costs. So $1,000 deposited for 2.7%, and then $750 borrowed in Ethereum. Okay, so that costs us 1%. In the end, we are now positive. We get paid money to set this up. So now you are $750 worth of Ethereum in debt. Now what you want to do is, with that knowledge that Fantom has an inherent leverage of 3 versus Ethereum. So say when Ethereum goes down by 3%, then Fantom goes down by 9%, and vice versa. When it goes up by 3, Fantom goes up by 9%. With that knowledge, we know now how much Fantom we have to buy. We are $750 in debt denominated in Ethereum. We now have to buy $250 worth of Fantom to neutralize the market volatility. So that's what you would do. You borrow in Ethereum, you swap $250 of that Ethereum into Fantom. And what you do with the remaining $500 that you've got in Ethereum, you maybe swap this again for stable coins. And those stable coins you can again just deposit over here just to get a bit of a yield. You can also do a bit more fancy things where you get more return. You can put that money into stable coin liquidity pools, but that's a topic for another video. In this video, simply to set this up, you need to make sure you are neutral on your collateral. So you've got a stable coin, you borrow Ethereum, and then you swap a third of that Ethereum into Fantom. And for the remaining Ethereum, you simply, again, swap this into stables and deposit this over here. That's how you set this all up. So no matter where the market is going, if it's going up or down, your position shouldn't move by much. The only real factor of how this trade is doing is, will Fantom risk adjusted, beta adjusted, outperform Ethereum? Will money flow from Ethereum to Fantom? If that's the case, then this position should, over the long term, create return. Of course, no financial advice, right? But that's simply just the trading strategy to gain from Fantom without being exposed to all of that market risk. If you've got any more questions around this, feel free to comment this down below. Feel also free to join our Telegram group. That's just below over here. And of course, would be more than great to see you in the premium channel as well. If you're interested in more Fantom related content, I've just made a video around Tomb Finance and how it impacts the overall Fantom ecosystem. That's the video over here. Thanks for watching and see you next time. Bye bye.